Hi, my name is George Dagnino. I'm the editor of the Peter Dag portfolio since 1977. You can find more about my work on www.peterdag.com or on peterdag.blogspot.com. Today I'm going to talk to you about how to use trend lines to determine stock turning points or stock market turning points. The subject of my presentation is to show you how to use trend lines to identify a trend of a stock or of the stock market. How to use trend lines as a warning mechanism to tell you when there is an opportunity or when you have to start being concerned about the trend. I will also talk about support, how to use support and resistance levels, and together all this with trading volume. I start my analysis always by looking at the advanced decline line on the New York Stock Exchange. I use the 40-week moving average that I discussed in previous presentations, and its trend tells me where the main momentum of the market is. Notice how since 2009 the advanced decline line always moved above the 40-week moving average. It started the correction here in mid-2011, and then notice how the advanced decline line started moving up. So that tells you that there is a lot of stocks that are moving, more stocks advancing than declining, so there is always an opportunity to make money when the advanced decline line rises. There are several websites that give you information, and they sorted by a percent change, and the change and which sectors are you see here are the strongest ones, so you can choose which sectors you prefer when you see the advanced decline line, which are the strongest and which one you should be involved with. Again, there is also, if you want to go more into details, here there's other websites that gives you, they sorted the which stocks are the strongest one, and in this case you have on the left the symbol, and then you have here which stock, the name of the stock, and then here the percent change and gain or loss for that particular period. So there is always a way of looking and finding out which stocks are moving the advanced decline line. This chart shows the graphs of the S&P 500 from the last 2 years, from 2010 and 2011. The important thing in drawing trend lines, in my humble opinion, is that the longer is the time covered by the trend line, the more important that trend line is. So I always use trend lines like this one here, which covers from April to September, so 2, 3, 4, 5, 6 months. For instance, this other trend line from September 2010 to March 2011. Here this trend line is from July to December, and then this trend line here is from October to January. So they are trend lines that cover long periods of time, and they give you the best information in my view. Notice how when they break the market breaks above the trend line here, that tells you there is a significant change in momentum. On the other hand, when it covers, when the market breaks a trend line that goes for 6, 7, 8 months, then of course there is it should tell you that there is a major loss of momentum. Here, this is a trend line that the market violated, broke on the upside, so that would tell you that there is strong momentum going up on the upside. Here again, this trend line was, what does it tell you? Yes, the market is up, confirming the information that you get from this trend line, and the trend of the market is up. But how do you use this trend line? This is going to be a very important trend line. Why? Because when the market, let's say this goes up, 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 but when the market will break below this trend line, that would tell you that you have to be careful, because this is an important trend line covering several months. So you have to keep an eye on this one. This is how basically you use trend lines. So let's see now a few other examples. This is another example for Caterpillar. It goes the same period of time, 2 years, and as you can see, this trend line covers almost a year, and notice how it connects this point here, this point, and eventually this point. And when the price of Caterpillar broke below this trend line, it would tell you that there is an important change in momentum. It doesn't tell you that there is going to be a decline, but it tells you be careful, because a big momentum is very important. Note that for those of you who are familiar with the concept, that this is a semi-log chart, so the break is important. Then the drawing another trend line which goes from May to December, see how the price of the stock broke above this trend line, suggesting that the trend of the stock of Caterpillar was up. Also drawing this trend line here, it tells you, yes, the trend is up until when? Well, the time to be concerned is when the price of the stocks here falls below this trend line. So this is a very useful, very simple warning mechanism of when you have to be careful. This chart is going to show you how to use support and resistance levels together with trend lines and volume. The stock is still Caterpillar, and what I drew is two support, actually resistance levels, here and here around $95 and here around $70. I'm sure you recognize how I drew this line by touching the previous peaks in the stocks, and these are the previous bottoms. So this becomes a support to the price of the stocks. When the stocks breaks below this support, now this level becomes resistance. As you can see here, the stock hit this resistance, and then the trend line that is drawn here, the stock breaks above the trend line and the resistance level, and now the trend is up as indicated by this chart, by this trend line. The same thing happened here. This was a resistance because the stock hit this level twice, but eventually it broke above this resistance and kept on going. The interesting thing is when you look at all this information, and the volume could give you interesting further data on what is going to happen. Notice how the very large volume, when you see unusually large volumes like here in March 2010, that tells you that a lot of people sold, and they sold to the strong hands. So unusually this is when indicates that you're close to an important bottom. This sharply increasing volume after a rally of this size tells you instead that there is distribution. And then when the stock started going up here, then you can draw the trend line. Notice also that at this point, volume increased sharply here, and that tells you that yes, the investors were convinced that the price of Caterpillar would go up, and volume stayed pretty much above average. On this side, volume also came very strong, but on the decline. Here eventually spiked up, and that was telling you that this might have been a bottom, but that obviously is hard to tell. You could have drawn a trend line going this way to say, well, this could have been a bottom, but no major trend is still in place. But this large volume, I think, after such a correction, usually is a positive development. So with this chart, I showed you how level of resistance are important to determine the main momentum. When you associate that with volume, this level becomes support, but then when the price breaks down, it becomes resistance. And then again, the use of trend lines to see when the trend has turned from down to up. Thank you again for viewing this video. There are many more I put here on YouTube, and you can review them also on www.peterdag.com, or more information also on peterdag.blogspot.com. Thank you again, and I hope to see you really, really soon. So long.